Recently, there was an article published on Prospect Capital that even received some mainstream media coverage. According to a Bloomberg report from last week titled "Private Credit Fund Burned by Risky Bets is Bleeding Cash," Prospect Capital has been going down a very dark path for a number of years. And today they claim that the company is exposed to an astronomical amount of risk. According to the report, it says, Prospect Capital, a little-known New York firm that helped pioneer the private credit boom, has come up with an unusual technique to keep dividends flowing out of an $8 billion fund it runs. For years now, it's sold financial instruments to retail investors and handed over the proceeds to shareholders. I've personally never been a shareholder of Prospect Capital, despite the appealing features of their stock, which includes a high monthly paying dividend. However, I do know that it's a very popular holding among income investors and BDC fans, so I wanted to give my 2 cents on the accusations in this article. The report starts off with stating that many of the companies that have borrowed from Prospect Capital have been having a significantly hard time paying them back in our high interest rate environment. As a result of this, Prospect Capital has been accepting payment in kind, or PIK arrangements. These are when the lender goes to collect the money from their debt, but the borrower doesn't have the money to pay the lender. So instead, the lender, or Prospect Capital in this case, will look at them and say, "Alright, well if you can't afford to pay us, we'll issue you new debt so that you can pay us later." As a result, the company is actually allowed to report this as income. This Bloomberg article has this little comic strip that explains what's going on at Prospect. At the lender's office, "You owe us $2 million in interest on your loan, but I don't have that cash. No problem, we'll just add that $2 million to your bill in the form of new debt. Great. It doesn't really matter if they pay us with cash or additional debt, we can still count this as income on our books." Now, what I think is definitely worth mentioning is that payment in kind isn't new to Prospect or even exclusive to this company. PIK has been around for many years, and every BDC is currently using this method to a certain degree. Even the much bigger and well-known BDCs are using PIK arrangements with some of their borrowers. Ares Capital has some PIK arrangements in their portfolio, and so does Main Street Capital, Blue Owl, and every other BDC I looked at. So doing this isn't unique to Prospect Capital. What is unique, however, is just how much of their portfolio is relying on payment in kind arrangements. A whopping 1/3 of their reported income was directly attributed to these PIK arrangements, meaning that without them, Prospect Capital's dividend and book value would be significantly lower than what they are today. To quote the article, Prospect's investments generated cash flows that were $200 million less than the amount of their fund's distribution in dividends last year, the biggest shortfall in the last 7 years, analysts say. What's more, the price investors are willing to pay for a stake in the fund, known as Prospect Capital Corporation, has plummeted to more than 40% below the value of its underlying assets.
All right, we're going to stop it here. If you're wondering, that was a channel that I follow called The Dividend Bull. I believe that's the name. And he's got a great wealth of information on there. He's been putting up videos for years, and he's been consistent with it. So by all means, listen, if I'm getting information from a source, or if I'm watching somebody, I have no qualms in giving that out, that information out to some of you. However, I would like to focus on Prospect Capital. Because I've done videos on it, as you know, on this channel. And I told you all in the last Prospect Capital video that I did how I was using Prospect Capital as an investment, right? I am no longer purchasing shares of Prospect Capital with my own money. Right now, my shares of PSEC, okay, ticker symbol PSEC, once again, my shares of PSEC, okay, and what I own is purchasing shares for me. I am no longer putting any more of my money into Prospect Capital for the various reasons that I've already outlined in prior videos. In addition to what we just saw. There are a number of concerns with PSEC. There always has been. And if you've been paying any amount of attention to this company over the past 10 years, then you can clearly see that there are some things to worry about with Prospect Capital. Here, let's do this. If you look right now, Prospect Capital is down near some of its all-time lows, okay? It's down near some of its all-time lows. If you see, look over here and you see the 52-week low. The 52-week low is $4.69, and we're not far off from that, right? The 52-week high is $6.30. We are far off from that, right? The dividend yield It's coming in at over 14% right now. However, again, you got to look at the history of this thing. And the max chart is telling you that over the course of the lifespan of this stock, since way back in 2004, this stock has performed terribly. It's down 66% all time. Down 66% all time. Again, Prospect Capital is another BDC. So if you want to know more about BDCs, check out my last video and check out the particular section that I did towards the end, or beginning rather, talking about the drawback to owning a BDC, right? But if you look at this, here's why. There are two reasons why Prospect Capital is very, very popular amongst dividend investors. It's not really hard to see. I don't know why everybody's acting like, oh, we don't know why Prospect Capital is so popular. No, there are two reasons why it's popular. Okay, the first reason is that its price point at $5, at nearly $5 a share. Okay, at $5 a share, that means that you can take a good $100 from your check, invest it into Prospect Capital, right? And come away with 10 shares of this. Right? Is my math right? 100 divided by 5. No, 20 shares. Sorry, I'm off. Charge it to my... It's still early for me. I work nights. But anyway, listen. So you can come away with 20 shares, nearly 20 shares of Prospect Capital for $100 right now. So if you let's just average it out. Let's say 20 shares. 20 shares times its dividend, which is, I think, paying out 6 cents right now. 20 times 6. Ladies and gentlemen, it's not difficult to see why Prospect Capital is a popular stock among dividend investors, with a dividend yield of over 14% and the stock price being nearly $5 right now. People are looking at this as a bargain. People are throwing caution to the wind. They're saying, hey, I'm willing to take on all the risk of Prospect Capital. I'm willing to take on the fact that the Prospect Capital has not performed well. I'm willing to accept the fact that Prospect Capital all time is down 66% since its IPO. People are willing to look beyond all of that in order to get in on a high yield dividend that's only going to cost them $5. The cost of less the cost of a meal, right? Half the cost of a meal that you could go and pull up at McDonald's or Wendy's and get right now. It's not difficult to see why people are interested in Prospect Capital, especially when people are looking for ways to make their money stretch. I'm not gonna lie to you. Listen, at this price, at $5.06, you can believe I'm tempted to go and buy and throw $200 on this. Matter of fact, here, I'm gonna open up my Robinhood. I think I just got a payment for Prospect Capital, by the way. Here, let me turn on my screen recorder. We'll do it live. Turn on my screen recorder. Let's open up Robinhood and see what we got here. Because I'm telling you, I'm very tempted to go again and just throw $200 at this and call it a day. Again, I know that I understand the Prospect Capital is a very, very risky investment. Here it is. Got to pull it up right here. All time, I'm down $240. That number was way more, was a lot larger a couple months ago. I was down somewhere like $500 or something like that. But since then, I've been able to sort of close the gap and lower my average cost basis. Now, my average cost basis is $6.42. You can see it right there. I currently have 177 shares of this, which is yielding me. Let's go down to my last dividend payout. It was August 21st, so a couple days ago. And that dividend was $10.53. And you can see they're also paying me a stock lending payment for lending out my shares. But $10.53, right? So that gets automatically reinvested right back into my account. So that's at least purchasing a little more than 2 shares without me having to do anything at all. 2 shares at 6 cents per share, that's 12 cents. It's another 12 cents that gets added on every single month at the very least, right? So you can look at it that way. I told you in my last video how I was using Prospect Capital to come up and to use it to purchase shares for me. Again, I have not put any of my personal money into Prospect Capital in a very long time. This cost of $5.06 or 7 cents is making me reconsider at this very moment. I'm not going to lie. And just for dramatic purposes, I do want to see, let's go to my calculator here. All right, so at a cost of $5.06, let's say we took $100. You divide that by $5.06, you're going to come up with nearly 20 shares, 19.7 odd shares, right? Then we're going to times that times 0.06, and you're getting a little over $1.18 per share every single month just for adding $100 to your portfolio. So you're lifting your overall. So listen, I'm not going to tell you all how to invest because that's not what we do on this channel. My job is to tell you about the risks associated with the investment and give you all the information that I can along with it so that you can make an informed decision for yourself about what you're going to do, whether or not you're going to invest or not. That's my job here. My job is not to tell y'all what to do. I can't do that. It's your money. It's your account. It's your investment future. You got to do what's best for you and what you think is best for you. Like I said, with $100 will get you $1.18 per share. I mean, $1.18 every single month in dividends added to whatever you're already accumulating right now. So again, it's very, 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 very. Listen, I am tempted to go and buy some more shares. I'm not going to lie because I haven't seen Prospect Capital this low in quite some time. All right. And basically the news, let me sum the news up. The news is saying, listen, they can't afford to keep paying this dividend. They don't know how they're doing it right now. They don't know how they're coming up with all this money. They're pretty much playing corporation games in order to be able to report different things on their tax returns and report different things on their earnings calls and things of that nature in order to where it looks like they're doing better than they actually are. But what they're really saying is Prospect Capital is in trouble. They're saying they're in trouble. The stock price and probably the dividend as well is in trouble. So these are things to consider if you're investing in Prospect Capital. Listen, I thank you for watching. I don't want this video to be drug out. You guys get the point. Let me know what you think down in the comments. Will you continue to invest in Prospect Capital? I genuinely want to know. Do you all, those who own Prospect Capital, do you plan on still investing in it, or are you going to take a step back and or are you going to sell your shares? I really do want to know because, hey, listen, I could take my investment in Prospect and probably use that money towards buying some NVIDIA or something, because at 177 odd shares, that's about a little over $900 in market value. And that's including the amount that I'm down. There's options you have is what I'm saying. So I want to know what you all would do. Let me know down in the comments. This has been your play of the day, and I will see you all in the next one. All right. Y'all let me know what y'all doing out there. Later.